Well, hello there, Maverick traders. This is Imri, and welcome to today's Market Roundup. So it has been a phenomenal time to be a currency trader. It looks like volatility is definitely back in full force in the markets, and it's been quite some time since I've seen volatility like this. So it does make for some amazing trading opportunities, and we're going to start taking a look at today's action. So there's just been some wild back and forth action in equity markets in the overnight. I don't think I went to sleep until about 3:34 in the morning because I was trading the overnight action in the S&P overnight futures, and it was wild. I mean, every bounce got sold, and then as the market opened up, we saw a strong rally. Looked like bulls might be back in the driver's seat, and then that rally got sold, and then the S&P ended up marginally down on the day. And then, of course, there's panic in the crypto markets, which we're going to talk about as well. So first up, we've got the S&P 500. Now, I've been talking about the support area between roughly 4150 to just under 4100. And it's been an important area. You can see we've bounced from there a few times and we've finally broken below it. The question, of course, on everyone's mind is how far are we going to go? Are we due for a full-blown bear market, recession, depression, etc.? And as a contrarian trader, it can be tough to make a stand when everyone else is leaning one way or the other. So what I can tell you is that just because the market's feeling bearish does not mean it's time to be bullish. And just because the market's feeling ridiculously bullish doesn't mean it's time to get super bearish on that market. But when almost everyone is unanimously bearish, it does make me wonder how close we are to a capitulation bottom. And I think we're getting relatively close, and I think we're going to see a couple days of bullish price action, and it's going to be fierce. So I'm not going to answer the question of where I think the economy is headed, but in terms of where this price chart is headed, you can see that selling momentum. I have an RSI indicator up here. You can visually see that selling momentum is starting to slow down a little bit. Now, we haven't gotten quite as oversold as we did towards the beginning of February, but we're getting close to reaching oversold conditions on the daily chart in the S&P. So I wouldn't be surprised to see some buying activity perhaps early next week. Let's see what we're going to get. And over in the total world stock index, it's a similar story. We broke below crucial support. We're trading well below moving averages right now. And the RSI is getting close to oversold conditions. Now, just because something's oversold does not mean it's over or it's done being sold, but it is one thing that we can keep an eye on. All right. So again, I'm expecting there to be at least a relief rally over the next several days. And over in crypto land, I told you guys last week about how I'm keeping an eye on the crypto market, and I said it's stuck between these two trend lines. And the market was going to have to make a move one way or the other. And well, the market sure did make its move, breaking lower. Now, Luna is not in this basket. If it were, the basket would be a lot more bearish looking. But even so, this is looking pretty scary. That being said, I wouldn't be surprised to see a bounce in Bitcoin as well, and in the other cryptocurrencies. Not all the cryptocurrencies, but the major ones that we're tracking. The ones in this basket for sure, right? Bitcoin Cash, Ethereum, Litecoin, and Bitcoin, of course. I wouldn't be surprised to see that same kind of relief rally over the next few days. I'm definitely not saying it's time to pile back into the cryptocurrency markets, but it is worth keeping an eye on. It's been a fascinating market to watch, and the wealth that's being made and lost in these markets in the matter of minutes is incredible. So anyway, we can see here the RSI is getting oversold, or it is oversold, and that kind of coincides with not the strongest bearish looking candle here. You'll notice that we didn't quite close on the lows. Granted, as I'm recording, there's still 3.5 hours to go for this candle to close on its lows, but nonetheless, I would not be surprised to see some bouncing in the crypto markets as well. So the market outlook remains very bearish. We have to respect the scoring system. We have to respect the technicals. However, I will point out we're trading quite far away from those moving averages. And you know, I would not be shocked at all to see a certain degree of mean reversion in the days ahead. The economic calendar is pretty clear for tomorrow, which I think that might give the market a little bit of a room to breathe and not have to digest all this inflationary news that's been coming out. So we'll see what happens tomorrow. Put a gun to my head and ask me if it's going to be another wild day. I'd say probably yes. I don't think we're done seeing the twists and turns in equity markets. And yes, of course, that's going to bleed over to currencies too. Now, jumping into currency analysis, starting off with cryptos, it's been a rough day. It's been another rough day. There isn't too much to say here other than, I think it's time to stay away from crypto. It's not the time to be brave and look to buy bottoms. As bad as things have gotten, they can keep getting worse. I'm not saying they will necessarily. I'm just saying the possibility is definitely there. And trying to catch that falling knife it's foolhardy. That's not trading, it's gambling. So in my opinion, it's best to stay away from cryptos, period, until we get conclusive evidence that at least some kind of temporary bottom is in. Moving over to fiat, the yen was the leader today with the dollar coming in second place, but even dollar yen was down over 1% today. So that just shows you how strong the yen has been. The biggest losers have been the Aussie and the New Zealand dollars, followed by the euro and the Swiss franc, and then the pound and the Canadian dollar are more or less flat on the day. Now, a note on yen strength. A lot of people are saying that, of course, the yen would be strong. It's a risk-off environment. Equities are selling off. Bitcoin is selling off. People are going to buy yen as a safe haven. However, I don't think that's the full story here. We have to look at the remarkable yen weakness that we saw over the course of last year as well. And if the whole market's long yen and there isn't a lot more room if the whole market's short yen and there isn't a whole lot more room for sellers to come in, well, those sellers of yen are going to cover their positions and that unwind is going to be massive. And I think part of that unwind is what's driving this yen strength in addition to its historical role as a risk-off currency. Now, in terms of velocities, the short-term velocity scores are interesting. They're not as extreme as they were earlier in the week, but we definitely have the yen and the dollar showing strong signs of positive velocity. The cryptos, of course, showing negative velocity. And then I'd say the Aussie, the euro, and the Kiwi on the fiat side showing negative velocity as well. So I think it's a no-brainer. We definitely want to be looking at the yen crosses here, looking for our low bases, looking for our bear market rallies to sell. That's definitely on the watch list. So with that being said, we're going to go right ahead now and take a look at some possible trades. So I've got two currency pairs on my watch list right now. One is Aussie yen and the other is Kiwi yen. Now these are big moves. In Aussie yen, we went from a high of 95.75 all the way down today to a low of 87.30. That is a huge move. In relative or absolute terms as far as currencies are concerned. And, it might not necessarily be done. The daily RSI is not quite oversold yet, and I think there might be room for one more push lower. If I zoom in on the short-term charts, we're trading right between the moving averages, and the RSI indicator, one of my favorite momentum indicators, is trading into what I would call bear market resistance. So bear market resistance is an area I watch out for between the 50 and the 60 roughly the 50 and 60 bands on the RSI. So that would come in about here. So if the RSI momentum signature peaks somewhere in this bear market resistance zone on the 15-minute chart, then I wouldn't be surprised to see Aussie yen start sliding once more. This looks like a time-based correction, not necessarily a price-based correction, at least for now. So we can expect some more sideways movement, but I would not be shocked to see this break down in the least. And then Kiwi yen is, it's a mirror image. The only thing to worry about with these currency pairs, as far as the kinds of corrections I'm expecting, is the positive divergence I see here. So as the indicator made lower lows, the price action did not, and we're seeing that divergence in the RSI. So it's possible that this turns out to be more of a price-based correction. We get a bit of a squeeze, which is why it's important to wait for your setups to come to fruition, right? But if I'm right, and we do have another leg, you can see the positive, the bullish divergence in the Aussie yen pair as well. But if I'm right and we can expect another leg lower sometime in the near future, I think that's going to be a very high probability trade, and B, the risk reward profile should be quite favorable on such a trade as well. So no brainer. We're just looking for some straightforward trend continuation patterns here. So in conclusion, the market's likely to stay bearish until we get that capitulation bottom, I've been talking about, and what we've all been talking about here in Maverick. And the dollar and the yen are strong. The Aussie and the Kiwi have been really weak, and the Euro's been weak as well. I expect that to continue, and I think the pound will remain weak as well. The Canadian dollar is interesting. I think it will be weak relative to the yen and the dollar and perhaps the Swiss franc, but strong relative to the Aussie and the Kiwi. So the Canadian dollar benefits from some of that shine that the US dollar gives off. So if you're looking for a trade that might be a little bit easier to carry and is a little less volatile than, say, the yen crosses, you could look perhaps to pair Aussie and the Kiwi, or perhaps even the Euro, against the Canadian dollar. So those are my thoughts for today's market roundup. Stay safe, guys. I mean, you do not need big positions to make a lot of money when a market's this volatile. Just keep that in mind. Position size appropriately. Stick religiously to your trading plans, and we'll see you next week. Take care, everybody. Happy trading.